Welcome to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can subscribe to all of our work at americastalking.com. To support Everyday Economics, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording this episode on Tuesday, November 7th. And join me as always, Dr. Orphe Divounguy, PhD economist. Dr. O, jump right into it. We're a couple days past it. You've had time to think about it. The numbers are in. Jobs are cooling. The job report came in for October, and it's only 150,000 new jobs added. I'm asking you because I have not had a time to really dig into these numbers.
For sure.
Last time around, there was a significant increase in the number or the percentage of government-related jobs. The last two jobs reports have both been corrected downward. This report comes in at 150. Tell us what we need to know.
For sure. So comes in at 150 after $100,000 job downward revision in the last couple of months for the previous job reports. But ultimately, yes, the labor market's cooling. And the reason we know that is that wage growth continued to fall. It fell, I would say fell slightly. Some people want to exaggerate this and say, hey, wage growth is really cooling. Look, wage growth moderated. Basically, labor demand has fallen somewhat, fallen more than the job openings that we get from the JOLTS would suggest, because of course the JOLTS was increasing the month before. But ultimately, look, if you add back the 33,000 jobs from the strikes, the UAW strikes, you're basically back at about 183,000 jobs. You know, if you look at monthly job gains before the pandemic, they average about 200,000 jobs. So when we talk about a soft jobs report, you know, I say, okay, it's kind of on the softish side, but it's not that soft. Okay, this is still a pretty good jobs report, you know, when you consider it relative to what we're used to, you know, this country creates in terms of jobs on a monthly basis historically. A little soft, but not that soft, you know, not as soft as the big media narrative that we heard in the past few days. And I think investors kind of overreacted a little bit, you know, and you saw yields decline tremendously in the last week or so because they thought, hey, you know, inflation's coming down more. The jobs report's really low. Maybe the Fed's going to cut interest rates. I think it's crazy to think at this point that the Fed's going to cut anytime soon. Absent a major shock, the U.S. economy is still on solid ground, and I just don't see it, right? So we can't predict recessions. Let's just put it this way, right? They're shocks because they're just unexpected. And so, you know, the only thing that I see here is a slowdown, a moderation, right? I don't really see anything to be scared about or worried about. The one thing that I wasn't too thrilled about, to be honest with you, though, is that the job concentration, right? So healthcare, social assistance, those are sectors that were still so far below where they were before the pandemic. And so they're finally catching up. What I find a little bit interesting and maybe a little crazy is the government sector adding 51,000 jobs, really leading the job gains in the past couple of months, especially when interest cost is already that high. So I find it surprising.
So I'm in the data now, and I've had a chance to look at it as we've been talking. And it's 3 months in a row that government jobs have totaled, just oddly enough, 51,000. And the month prior to that was 91,000. If you look at the percentage of government jobs with you know, in ratio to the other jobs that have been added,
it's a third.
It's a huge portion.
It's a huge portion. And that's not sustainable. I think that's the part that makes me think, okay, maybe, just maybe, the labor market could cool significantly going forward. It's because, hey, we're adding government jobs at a time where the cost of government has increased and will increase. And the question is it going to be sustainable? What's going to probably happen is the Treasury is going to have to issue more securities, and that's going to push yields higher. What's probably also happening is state and local governments are continuing to hire, and I don't think that's sustainable. So at some point, I think we're going to probably see that cooling in the government sector. And maybe that's what investors are looking at when they're basically trading as if the Fed's going to be cutting rates, when basically I don't see it yet. But yeah, maybe it's coming.
Final thoughts on the job report?
Yeah, I just think it's still a pretty decent jobs report. And so I think people kind of overreact when they say, oh my gosh, the labor market's cooling. Yes, it is cooling. It's moderated, but no, it's not. It's not a sign that we're heading into a recession. It's not a sign that the Fed's going to have to cut interest rates. The Fed is pausing. The Fed might be done raising, but I don't see the Fed cutting anytime soon unless we get a big shock. Remember, recessions are unexpected, right? And so when I hear people telling me they're trying to predict recessions, I think it's foolish.
For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.